This is your CBR Briefing. I'm Joseph Cox. Now, the Caribbean's BPO sector, major employer in several CARICOM economies, faces its most seriously policy headwind in years. The Keep Call Centers in America Act of 2025 is a bipartisan bill which would sharply limit offshoring of call center work and impose new compliance on funding and disclosure rules. While designed to protect U.S. jobs, the bill carries strategic risks for Caribbean economies, many of which depend heavily on U.S.-linked business process outsourcing and call center services. The bill's most impactful elements for the Caribbean include: 1. A public offshoring list, the U.S. Department of Labor to list employers who offshore call center work. Listed firms are ineligible for federal grants or loans for 5 years. Federal contract restrictions. All federal call center work must be performed inside the U.S. Penalties and clawbacks. Federal funding recipients who offshore face financial penalties, repayment, and possible contract cancellation. And, of course, the disclosure rules. Agents must disclose their location and AI use. Consumers can request transfer to a U.S.-based human agent. Now, the region's BPO industry is deeply tied to the U.S. market, especially in voice-based customer service for retail, telecom, travel, and financial services. In that regard, the Caribbean has cultivated a competitive advantage in the BPO sector, with countries like Jamaica, the Dominican Republic, and Guyana hosting large call center operations serving U.S. clients. Raising the cost or compliance burden of offshoring could trigger contract terminations, reputational damage, and accelerated automation. The Act therefore poses particular strategic risks for the region, namely: 1. Policy-driven losses, market access erosion. Federal exposed U.S. clients may terminate Caribbean contracts to avoid penalties. There is, of course, a competitive bias where the federal contract preference for onshore providers weakens the Caribbean's cost advantage. There is reputational risk where offshoring lists could push even non-federal brands to move work onshore for optics. And of course, we're looking at technology-driven disruptions as well. We're looking at voice volume shrinkage, where AI disclosure rules plus consumer opt-in for U.S.-based agents may reduce offshore call demand, and automated acceleration, where firms may replace offshore voice roles with AI-enabled front ends rather than reallocate to human agents abroad. Now, given that BPOs in some Caribbean states employs thousands, often in youth-dominated workforces, this could also lead to job losses and reduce foreign exchange inflows. Specifically in Jamaica, the BPO sector employs over 55,000 workers. In the Dominican Republic, more than 40,000, and in Belize, approximately 18,000 persons. A 10 to 20% contraction in the most exposed markets could significantly raise urban unemployment, cut household incomes, and reduce service export earnings, with the obvious knock-on effects in retail, housing, and public revenues. But there is also a paradox at play. Now, over 70% of tertiary educated Caribbean nationals live in OECD countries, thinning the pool for senior technical and supervisory roles. Entry-level supply is abundant, but the so-called Tier 2 and 3 service delivery, for example in AI, cloud compliance, and analytics, requires targeted investment in stackable certifications, team-led pipelines, and diaspora engagement to plug senior skill gaps. Belize is already executing a dual-track strategy to future-proof its outsourcing economy, one through the Global Digital Services Investment Policy, where they are targeting cloud computing, fintech, AI, cybersecurity, and creative industries, and 2, through an IDB-funded upskilling program, where they are training 50-plus BPO workers in cybersecurity, data analysis, etc. By aligning skill development with higher value, less policy exposed service lines, Belize is addressing both market diversification and the supervisory talent gap that has been identified. The Keep Call Centers in America Act signals a clear protectionist turn in U.S. outsourcing policy. For high exposure markets like Jamaica, Belize, and the Dominican Republic, the next 12 to 18 months are critical. Governments and industry leaders should audit their BPO contracts for federal exposure, fast track to the extent feasible mid-skill upskilling pipelines, and engage diaspora talent in supervisory and SME roles. There should also be a negotiation for carve-outs under the U.S. Caribbean trade frameworks. But here's the bottom line. Those who act now can reposition the Caribbean as a specialized higher value outsourcing hub. Those who don't risk seeing a decade of BPO growth eroded as U.S. clients onshore sensitive work and accelerate AI-driven automation.